Breaking news, Mutual of Omaha Mortgage acquires Keller Mortgage. Just the latest in the latest round of mergers, acquisitions, bankruptcies, a lot of shakeup in the mortgage market. In this video, I'm going to talk about this specific acquisition, but I'm also going to talk about the mortgage industry as a whole, what you should know as a consumer, what you should know as a real estate agent when referring or using different mortgage companies. It's important stuff, so stay to the end. All right, Matt the Mortgage Guy, residential mortgage broker licensed across the country, powered by you mortgage, greatmortgagebroker.com. That's how you connect me and my team. Enough said about that. Let's talk about this latest acquisition. And no, this video is not meant to throw shade at anybody. Truth be told, Keller Mortgage, when they came along, didn't really have a huge impact on my business or any colleagues' businesses. I know a lot of Keller Williams agents who are great agents who continue to use the great referral partners who had helped them build their business and, didn't all of a sudden just start using Keller Mortgage just because it was another arm of the business, right? Because their business would be impacted if they weren't delivering. And, it's harder than it looks to deliver and to have a great client experience in mortgage, deliver great, products, pricing, service, all that stuff, right? And so it makes sense that when a new player emerges, realtor partners aren't just jumping at the opportunity to go try somebody new. Mutual of Omaha Mortgage has acquired the assets of Keller Mortgage, the lending arm of real estate holding company KWX, for an undisclosed amount. Keller Mortgage will be operated as an independent division alongside Mutual of Omaha's existing forward and reverse mortgage division. MON said in an emailed response. From what I've heard of Mutual of Omaha, because they are an established mortgage company, they do a pretty good job. And so them going out and acquiring Keller Mortgage, who knows how much they paid, but it's an upgrade to likely anybody who was part of that transition. I know that like a lot of mortgage companies, Keller Mortgage was downsizing and laying people off. So not everybody survived, but those that did probably get plugged into a better model with Mutual of Omaha. This transaction, brings together two leaders in the mortgage industry. I mean, again, no shade, but let's be honest, two leaders in the mortgage industry. Not to I don't want to discount Mutual of Omaha because not them. They've existed in the past, but like brand new Keller Mortgage, who could barely tie their shoes, to call them a leader in the mortgage industry. Truth be told, they probably had a top line that was lower than the cafeteria at United Wholesale Mortgage when it comes to revenue. But beside the point, I'm gonna stay on topic here. Keller Williams has retained a stake in the Keller Mortgage division, and like they're not talking about leadership changes or any of that stuff. Okay, so I won't read through this whole article, but it is a good topic to discuss and a good thing to kind of put out there for the public, for real estate agents, for anybody. We are in turbulent times, real estate market and mortgage market alike. The mortgage market maybe even more so, because as real estate transactions slow down, there's less purchases that need financing. And we all know that, year over year decrease in refinances was like 21 to 22 was something like 85% decrease, right? Like people aren't refinancing at 6%, at 6.5%, when we've got 60+% below 4% mortgages, 30-year fix. Like people just aren't refinancing. So mortgage volume is down a ton. When mortgage volume comes down a ton, there's less people needed, both in operations, across the board, at any lender. And then on the origination side, like myself and my colleagues who are originating these mortgages, we're mortgage advisors, we're structuring these deals, we're advising clients, we're putting them together and moving the loan across. If you were not an A player, if you were somebody who woke up at 10 o'clock, rolled your way into the office, hoped that a deal would fall from the sky, found one, worked on it for an hour and a half, and then ate lunch and went home and called it a day. Those people can no longer survive. So loan originators slowly but surely migrating out of the business if they're not an A or a B player. Operations staff, unfortunately, when you go from 4 trillion in mortgages being originated to 1.7 trillion, less people on the back end in operations are needed for that. And as revenues start to come down, companies are scrambling to stay profitable, to stay alive in most cases. And so, I just read an article today from another mortgage company that, projected they could save 30 or $40 million by laying off X% of their staff. And so the warning and the advice is, don't have a loan if you're a consumer, or a client if you're a real estate agent and you're referring to a mortgage company, at a lender that is on the downslide. And I'll tell you the risk. I know some great people who were at a company who I don't know much about, so I won't, throw shade on them either, but they essentially went out of business. And when they went out of business, these loans were at the risk of not funding. These loans were out there, as much as people want to think that it's all sunshine and rainbows, and you started a loan somewhere, they've got to close it for you, right? Like, that would be wrong to not close a loan. There's a long track history in the mortgage industry of docs being at title, somebody physically signing their final documents, and the loan not funding because the lender's poof out of business. And so that's the last thing you want as a consumer or as a real estate agent. Make sure that you're working with an established loan originator at an established company. They don't all have to be growing 50% quarter on quarter like U Mortgage, but at the very least, they're not like massively downsizing, cutting staff desperately, trying to hold on, because the last thing you want. And I really have empathy for the people who are at these companies, because it's tough, right? You're already dealing with the largest financial transaction in most people's lives. And to have that hard conversation of, I'm sorry, pass on whatever information your company gave you about why that loan's not going to fund, why, they're going to do their best to move that to another lender and try to get that loan closed for you in 2 weeks. Like, it's just really, really scary stuff. Don't let that happen to you. Make sure you're working with a great mortgage broker. Make sure that you're in good hands, whether it's you personally or your real estate agent, it's your client. In a shrinking market, there's going to be some players that don't survive. And while all of it, I've got empathy for, and all of it is unfortunate for the families and the people involved, it's at the end of the day a good thing in business when only the best models and the best players can survive. Because then, as the consumer, you get the best rates, the best service, the best quality. Because if not, the person just doesn't exist as a business. That's my 2 cents. Thanks for watching. Let me know if you have any questions at all. If you're looking to connect with an agent in your area, go to homeandmoney.com/Matt. And if you're looking to connect with me and my team, it's easy. Go to greatmortgagebroker.com, fill out the quick form. We'll be in touch. While you're here, check out the other 700 plus videos I got on YouTube. Here, and here.